Hello.
Hi, Auntie. Let me just get my video hooked up here.
Yep.
It'll just take a second. I think this is the one.
Mm-hmm.
Yeah, there we go.
Oh, great.
You can see me all right?
Yeah. Can you see me?
Okay.
Is it working? Can you
No,
see
I
me?
can't see you, but that's okay.
Yeah, super.
As long as you can see me and get me recorded. Is the picture all right? I mean...
Yeah, it's fine. It's fine. This is
Okay.
fine. This is fine.
All right, good.
You can even yeah, that's perfect.
I'll look at the camera rather than looking at the video.
Yeah, fine. Can you see me? Can you see me at all, or just hear me?
I can just hear you. I can't see you.
Okay, sorry. I don't know why that's like that.
That's
But,
okay.
yeah.
Doesn't matter.
Yeah. So, how have you been?
Yeah, very good. Thank you. You know, I look forward to meeting you one of these days. Do you live in Zagreb?
Yeah, I live in Zagreb, but I'm mobile. I can move anywhere.
Okay. Well, if you ever come to London, let me know.
Yeah,
I spend a lot of time there. If I ever get to Zagreb or as well.
Yeah, that's very close. Yeah. I'll let you know when I get to London or Spain. Spain is a little bit off the hand, but Switzerland and London are easy for me.
Okay.
Okay.
Are you working for Elementum, or are you just doing this as a project?
I'm doing this as a project, but who knows? Maybe I start working with them.
Okay. I mean, you know, I saw that you went to school at Harvard. They didn't teach you that gold was the barbarous relic, did they?
No. Nowadays, or at the time I was, they let in the guys from all over the world, like Asaf Razin and guys like that come from Israel that are very keen on gold. You know.
Yes. Okay. Well, I saw that, and you know, I know that most American colleges have nothing good to say about gold, and in fact, I earned academic distinction when I graduated with my degree in international economics, and I learned how gold had no role to play in the modern international monetary system. And it took me a few years to realize that what I learned in school was complete rubbish, and I basically re-educated myself by studying Austrian economics, Mises, Rothbard, Hayek, and the others.
Yeah, I can tell you this is a big problem for me, because when putting up this conference, there is really a kind of a generational gap. I'm in my 40s, and there are few of the people that knew what gold meant before, and all of them died on me, unfortunately. So in a way,
I understand completely.
So in a way, a lot of in Croatia we do have one lost generation, the guys in their 50s and 60s, which went away and worked in Europe, in Germany mostly. Like Gastarbeiters, and so basically my generation is the one that filled all the gaps when we transition from socialism to market economy, and all these financial institutions were opened, and we all went there, and the whole generation kind of embraced this financial system as being virtual, the stocks and bonds, and have nothing to do with the real sector, and that's a real problem. So I had problems filling gaps and inviting people who will give me a whole story about it.
Well, it's very interesting because. Obviously the people in Croatia learned from what happened to the dinar during, what was that, 1994, 1995, 96. And, as I understand it, everybody in Croatia used the Deutschmark as their form of savings. And, back then it was understandable because the Deutschmark was a very good currency.
Mm-hmm.
It preserved purchasing power. But now the Deutschmark is gone, the euro is losing purchasing power. So people should just simply see gold now as the replacement for the Deutschmark.
Yeah, I see. Yeah. Uh, do you want us
Anyway,
to, do you want us to go through these questions that I prepared? Is it fine? Just as a phone?
they were all good questions. Happy to answer all of those.
Okay. So
Do we have a time limit?
no, but I would like to keep it under 10-15 minutes, something like that. But
Okay.
I think we can do it
Okay.
in that time. So
That's fine. If we run over, just stop me.
yeah, no problem. I might just have a pause between the questions, just for yeah, if we can just to make distinctions between the questions. Just a short pause, and I'll ask you another question for it. Okay.
Okay, that's fine.
So, do you think gold investing is a bubble?
No, it's definitely not in a bubble. People see the price of gold rising, but what they're ignoring is gold's value. There's a difference between price and value. The price has been rising because of all of the money printing, the quantitative easing that's been going on in the world. But gold still remains undervalued by all of its historical measures. And that to me is the key thing. Look at something's value. The value I calculate in two ways. One is objective, in other words, just numerically. Using my Fear Index and my Gold Monday Index, gold is still cheap. But also you can look at it subjectively. Gold has good value because it doesn't have counterparty risk. It's not dependent on someone's promise. It's a tangible asset when you own physical gold. And in this day and age, with the financial crisis still unresolved and with the sovereign debt crisis, getting worse day by day, you don't want to have counterparty risk. You don't want your wealth dependent on someone else's promise. You don't want the value of your money dependent on someone else's promise. So for this reason, I think gold still represents very good value. So focus on gold's value, not its price. When everybody's telling you to be buying gold, then you might think that it's in a bubble, but we're not anywhere close to that. That's still years down the road.
Okay, what do you think about silver, frequently considered the ugly younger stepbrother of gold?
Yeah, I'm actually more bullish on silver than I am on gold. The problem with silver, though, is it has a lot more volatility than gold does. And I measure this volatility by the gold-silver ratio. In other words, how many ounces of silver it takes to purchase 1 ounce of gold. Now, historically, it's about 16 ounces of silver is equal to 1 ounce of gold. But back in the early 1990s, we got up to 105 ounces of silver equal to 1 ounce of gold. We're presently about 52 or so. And I think over the long haul here, over the next several years, that ratio will continue to fall back down toward the 16 to 1 level. So as it does fall, that means silver is doing better than gold. And I expect that to continue. But there's a lot of volatility. Last year the ratio reached 31, 32 ounces, and then it went up to 58 ounces of silver to equal 1 ounce of gold. Not everybody can handle that volatility. But if you're prepared to accept the volatility, then yes, definitely, have some silver in your portfolio. What I generally recommend is to have 2/3 gold, 1/3 silver. And of course, I'm talking about physical silver. I'm not talking about any paper type of products.
What about uses of silver? Does that? Silver is mostly used and most widely used of all the precious metals. Do you see that increasing demand for it in the time in a short run or a longer run over the gold and other?
Yeah, you hit upon the point that causes the volatility. Gold gets its value because it's money. That's the primary demand for gold. Silver, on the other hand, is both money and it's also an industrial metal or a base metal in some respects. And as a consequence, as the economy goes up or down, that might affect the industrial demand for silver. But as problems with the monetary system continue to develop, the monetary demand for silver will remain remain strong. And it's this conflict between industrial and monetary demand that causes the volatility in silver. But, at the end of the day, right now, 1 ounce of gold and 52 ounces of silver account for the same purpose. And as I say, at some point in time, will probably be 20 ounces of silver equal 1 ounce of gold, or maybe even 16 ounces of silver equal 1 ounce of gold. So focus on silver's monetary attributes, the fact that it is a substitute for gold.
Distinguished investors like Warren Buffett have discarded precious metals as an investment. What do you think about that? Is he right?
Well, gold is not an investment, so in that sense, he's right. Gold is money. Gold does not generate a cash flow. It doesn't have a balance sheet. It doesn't have a management team. It doesn't have a PE ratio. It's just a sterile asset. It's money. He's comparing gold to the wrong things. You can't compare gold to stocks. Gold has to be compared to the dollar, the euro, British pound, the Japanese yen, because gold is money. And when you look at it, from that basis, is gold, is the dollar an investment? Is the British pound an investment? Gold's not an investment either. You have to compare these monies relative to each other. Now, over the past 11 years, gold has risen 11 years in a row against the U.S. dollar. It's risen 9 of 11 years against the euro. And over that period of time, it's up 17% per annum against the dollar, and I think it's 14% or 15% per annum against the euro. You're not earning 14, 15, 17% on your bank deposits. So as a consequence, you're losing wealth by owning euros or by owning dollars. You really want to own gold, and that trend is going to continue because of the way central banks are debasing the various currencies around the world because of money printing and quantitative easing. So don't view gold as an investment. View it as money. View it as a form of savings. Savings are a good thing, and everybody should have savings for retirement or a rainy day, or if some emergency arises. But instead of saving euros or saving dollars, you should be saving gold or silver.
So I think it's back to what he always says, that he is investing in the things he understands. So basically, he doesn't understand gold or silver, so he's not investing there.
That's a shame, because his father really understood gold. He had a brilliant speech in 1948 when he was a four-term congressman from Omaha. His name was Howard Buffett. We put the speech on the Gold Money site. But basically, Howard Buffett explains how gold and human liberty are interlinked with one another, because when gold is money, it puts a control on government spending. And when the government can only spend so much money, its ability to expand its power base is limited as well. So it's really quite shocking that Warren Buffett's view of gold is as it is, given the really deep and profound understanding that Warren Buffett's father had of gold.
What is your position on China and its role in rare earth elements and precious metals, and strategic position China is grabbing these days?
Yeah, I really don't know the rare earth metals, so I can't comment on that. But with regard to gold and silver, the impact of China is huge. Up until about a year and a half ago, China was able to satisfy its demand for gold and silver from domestic production. But beginning about a year and a half ago, the domestic mines within China could not produce enough gold and silver to meet Chinese demand. So as a consequence, China is now starting to import gold, and they're starting to import huge numbers. They become almost as big an importer of gold as India, which is the world's largest importer of gold. So the impact of China on the world gold market is going to be very bullish. It's very profound, and this is not something that's going to disappear overnight because of all of the monetary problems that China has. Inflation is rising very rapidly in China as crude oil prices go up, as food prices go up, and because food and energy are a much higher percentage of the average Chinese person's wage. they feel that inflation much more than maybe people in the West feel the impact of inflationary pressures from food and energy. So, as an alternative to holding yuan deposits in the banking system and the lack of sophisticated and capital markets in China, although it's changing, it still doesn't compare to the available options in the West. The Chinese people are accumulating huge amounts of gold and huge amounts of silver. And it's understandable. I used to live in Asia for most of the 1970s, and the Chinese people intuitively understand that gold is money. In fact, the Chinese character, the written symbol for gold and money are the same thing. So, they understand that during periods of monetary turmoil, they want to own gold and silver. And they also understand that gold and silver are a very good form of savings. So as they accumulate wealth, they want to put more and more of their money into gold and silver. So it's going to be very bullish impact. It already has been and will continue to be from Chinese purchases. And that's just at the population. I haven't even mentioned the Chinese central bank, which itself has been a big buyer of gold over recent years and probably will continue to do so as their reserves accumulate, their foreign exchange reserves. More and more of that will go into precious metals.
Do you have an idea how much of the gold and silver price increase on the world market has attributed by China and India and these these BRIC countries, and how much of the speculation and how much the natural cause of things like silver, gold being scarce and industrial needs and things like that?
Yeah, that's a very tough question because when you talk about gold or silver, there are really two types of gold and two types of silver. There's physical gold and there's paper gold. And the amount of physical gold is much, much less than the amount of paper gold. And that's even more so true for silver. Now, to a large extent, people who are selling futures contracts or buying options and, trading in various forms of financial derivatives, because it's so huge, it can have a big impact on the price of the precious metals. But at the end of the day, there's only so much available physical. And because of the fractional reserve nature in which these markets operate, it's really impossible to determine the impact of, China or India or any one source. But the bottom line is that there's a lot of paper out there purporting to be gold and purporting to be silver, but really isn't. It comes with counterparty risk. So you don't want to be in the paper market, you want to be in the physical market. And I think you're going to see an increasing demand for physical metal as the world's financial problems continue to unravel.
Coming from China to other developing countries like Croatia and Slovenia, do you think investing in precious metals for people in those countries is still an answer? They don't have that much of the wealth, but what do you think about that?
Yeah, yes, they may not have that much of the wealth, or they may not be large countries, but every individual, whether you're in Croatia, Slovenia, United Kingdom, United States, or China, every individual has to think about their future, themselves, and their family. And the best way to be prepared for the future, the future is uncertain, but the best way to prepare for it is to have some savings. And the best way to save for the future is to accumulate physical gold and physical silver. In Croatia back in the 1990s, people could go to the Deutschmark, and the Deutschmark circulated widely as an alternative to the local currency. And that's true in Slovenia. It was also true to a certain extent in Serbia. But as the Serbian dinar collapsed, people saw the importance of having some savings and a sound money. The problem is the Deutschmark doesn't exist anymore. There is no safe haven currency. Even the Swiss franc is no longer a safe haven currency because the Swiss National Bank decided to link the Swiss franc to the euro. So if the euro goes off the cliff, the Swiss franc is going to go with it. But given that the Deutschmark doesn't exist anymore, the only safe haven currency is really gold and silver. So, yes, regardless of where you live in the world, you have to have savings. You have to be prepared for an uncertain future. And the best way to do that is to own physical gold and physical silver.
We talked about Swiss. They only recently, I think in 2000, disconnected their currency from precious metals and made it completely fiat. Do you think they regret it today?
Well, I think a lot of Swiss do regret it, yes, because there have been various efforts to, go back to some kind of a sound basis in terms of their monetary system. And the latest effort that is underway is there's a movement toward getting a referendum to have what remaining gold is owned by the Swiss National Bank returned back to Switzerland for storage in Switzerland. So yeah, obviously the historical Swiss traditions of having a sound money, I think, are still there. And because of the Swiss National Bank's decision to tie the Swiss currency to the euro, I think that's had an impact, and it's caused a wake-up call to a lot of people to understand what's going on. And as they've looked at the monetary situation, they're obviously focusing more and more on the gold situation and want to make certain that their gold is safe and secure in Switzerland should national currency problems continue to develop.
So the last view that I want to comment with you is this: we are both international economics majors, and there's always a tangling question: could we return to something that was a kind of a Bretton Woods, like Bretton Woods Mark II, or having something in gold or silver as a backing? Do you see that?
Yeah, that's really a good question. To my mind, it's inevitable that we're going to return to gold at the center of global commerce. I mean, gold's been money for 5,000 years. This system that we're presently using of money backed by nothing except government promises has only been in place 40 years. Mm-hmm. And we can see from all of the imbalances and the problems that have arisen that this experiment, this 40-year experiment, is not going well. Mm-hmm. So as fiat currencies continue to lose value, and I expect all fiat currencies to eventually collapse. That's the history of fiat currencies. We've had dozens of fiat currencies collapse since the end of the Second World War. The problems that caused the dinar to collapse are the same thing that are now affecting the U.S. dollar, the British pound. Too much government spending, too much government borrowing. That borrowing was ultimately forcing the central bank to create more currency until the currency collapsed. It's just a slow motion collapse that's happening. The dinar was a fairly rapid collapse, but what's happening in the rest of the world is a slow motion collapse. But as we finally see, fiat currencies collapse, we're going to have to look for an alternative, and the only reasonable, logical alternative is going to gold's 5,000 years history as money. So one way or another, we're going to come back to the gold in the center of global commerce. But rather than governments doing it, I hope that private market initiatives do it. Like what we're doing in gold money, or other, companies enabling gold to circulate once again as currency. Because the Bretton Woods system was flawed. Governments changed the rules, and it disrupted the system.
Americans changed the rules.
Oh, I'm sorry. What did I say?
No. You said governments changed the rules. I said
the American government changed the rules. Well, but to a certain extent, all governments changed the rules because everybody was belonging to the IMF, even though the U.S. essentially controls it. But when the rules were changed, that removed the discipline on the money creation process, and as a consequence of removing the discipline on the money creation process, we've had 40 years of inflation, 40 years of monetary problems, and huge global imbalances, and these problems are not getting solved, they're getting worse. So yes, inevitably we're going to go back to gold.
Mr. Turk, thank you very much.
Thank you. It's a pleasure speaking with you. Sorry I couldn't be at the conference, but I hope it's a very successful and enjoyable one for everybody. Thank you.
Okay, now we can talk in the fade out.
I wasn't watching in terms of the time, but I guess it was.
No, it was fine. It was
15 minutes or so.
Yeah. It was perfect.
Okay, good. Okay. The conference is next week?
Yeah, on Tuesday.
Okay. Well, hopefully it'll be a good one for you and Peter and everybody else at Elementum. And please give Peter my best regards, and Mr. Pavica as well.
I thank you very much. I'll give them that, and we'll try to send. I'll send you over the. This is my wife's account because she has a better computer and account. But
Okay.
I'll send you from my Skype account reflections of the conference and things like that. So.
Are you going to post this on the internet? Is there some way that we can link to it from the Gold Money site?
I'll see how we can work with this video that we are shooting, this call, and if there's a possibility, and I believe so, I'll send you the conversation back, and we'll have the footage of the conference. And then I'll try to send it to you so you can use it in Gold Money.
Yeah, I mean, even if you want to put it on the Elementum website, we can link from Gold Money to the Elementum website.
Yeah.
And, that would generate a lot of traffic for you if you would like to do that. Yeah. What I'll do, Antti, it's pronounced Antti, right?
Yeah, all my international friends call me Antti. Okay. No problem. It's Ante, but
when I get off the phone, I'll send you the email of Paul Bouting, who does all of our online arrangements, so that you and he can coordinate with regards to the video if it does become available.
Yeah, no. We'll make something of it, and as all that we make as a video that has you, we'll send it to you, and we'll send it to the conference, and if you can use it if you want. Yeah.
Okay, wonderful.
Yeah.
Okay, great. Thanks a lot.
Thanks a lot. Nice meeting you on this occasion, and I hope that we'll come across again.
Yeah, I would like that.
Yeah.
Thanks, Antti.
Thank you.
Bye-bye.
Bye-bye.